Hello and welcome to Business 360. I'm Arundhati Ramanan, and here are the headlines that we're tracking for you this evening. Sensex and Nifty and marginally in the green after a volatile session. IT stocks snap a 5-day losing streak. Mid-caps outperform the blue chips. The Trump administration imposes a 126% tariff on solar gear imports from India, initiates a probe to determine if government subsidies are making American products uncompetitive. Stocks of Indian solar exporters slump in trade.
No one has ever seen before, and a turnaround for the ages. It is indeed a turnaround for the ages.
U.S. President Trump claims an economic turnaround in his State of the Union address, doubles down on tariffs with Supreme Court judges watching from the front row, attacks the Democrats repeatedly in what was the longest speech in U.S. history. Tata Group stocks rise in trade a day after Tata Sons board defers decision on extending the tenure of Chairman N. Chandrasekhar until the next board meeting in June. Under Chandra, Tata Group has seen its revenues double and profits triple in 9 years. February vehicle registrations look set for its best showing in the last 4 years. Registrations show an average 21% yearly uptick across segments. Commercial vehicles lead the pack. Ather Energy CEO Tarun Mehta says the electric two-wheeler maker has the capacity to achieve volume growth of 40 to 50%, which can help the company turn EBITDA profitable. Adds no product will be priced below 1 lakh rupees, even as he admits there is a market for such products. That's an exclusive. Mumbai Civic Body announces an 81,000 crore rupee budget for the next fiscal, allocates 60% of the outlay for capital expenditure, proposes 2,100 crore rupees for the Versova to Dahisar Coastal Road project. U.S. Defense Secretary Pete Hegseth issues an ultimatum to Anthropic, sets a Friday deadline for the company to comply with Pentagon's demands on the use of AI. Anthropic CEO Dario Amodei told CNBC-TV18 he does not want his AI models to be used for autonomous weapons and mass surveillance of Americans. Bill Gates apologizes to the staff at his foundation over his ties with convicted sex offender Jeffrey Epstein, admits he had 2 affairs with Russian women and claims he did nothing illicit, calls his association with Epstein a huge mistake. We'll come to all of that and more in just a bit, but let's start with the day's market action. Dalal Street closed in the green, with Nifty ending above the 25,450 mark. The Nifty mid-cap index rose 340 points, while the Nifty Bank underperformed. Nifty IT snapped its 5-day losing streak. The top story this evening: the Trump administration has imposed countervailing duties on solar cells and panels imported from India, Indonesia and Laos. A duty of 126% will be imposed on certain solar good imports from India. Imports from Indonesia and Laos have been hit with 105% and 81% tariffs, respectively. U.S. will probe if government subsidies in India and other countries is hurting the competitiveness of U.S. companies. Shares of top Indian solar companies declined in trade. U.S. President Donald Trump claimed that the first year of his second presidency achieved a turnaround for the ages during what was the longest State of the Union address in the country's history. Trump's 1 hour, 48-minute long speech was laden with repeated jibes at the Democrats. His address comes months before the pivotal U.S. midterm elections, with reports suggesting that the Republicans could lose control of the Congress. In his trademark style, Trump claimed credit for the economy, which he said was roaring like never before. The U.S. president also doubled down on tariffs, with 4 Supreme Court judges watching from the front row. 3 of them had ruled against Trump's tariffs. Surprisingly, he did not launch personal attacks against the judiciary, but called the court ruling unfortunate. Trump even shook hands with the judges before making his way to the podium ahead of his speech.
Just 4 days ago, an unfortunate ruling from the United States Supreme Court. It just came down. It came down. Very unfortunate ruling. But the good news is that almost all countries and corporations want to keep the deal that they already made, right, Scott? Knowing that the legal power that I, as president, have to make a new deal could be far worse for them and therefore they will continue to work along the same successful path that we had negotiated before the Supreme Court's unfortunate involvement. Congressional action will not be necessary. It's already time-tested and approved. And as time goes by, I believe the tariffs paid for by foreign countries will, like in the past, substantially replace the modern-day system of income tax, taking a great financial burden off the people that I love. We are in negotiations with them. They want to make a deal, but we haven't heard those secret words. We will never have a nuclear weapon. My preference is to solve this problem through diplomacy. But one thing is certain, I will never allow the world's #1 sponsor of terror, which they are by far, to have a nuclear weapon. Can't let that happen.
And staying with US, speaking at a Business Standard event last night, Commerce Minister Piyush Goyal has said that the trade talks between India and US will resume as soon as there is more clarity on the tariff situation.
How soon do you think you will be resuming your trade talks with the US?
Well, as soon as there's more clarity in the situation.
Okay.
The Ministry of Statistics is set to release a new GDP series on Friday using FY23 as the news base year. Latha Venkatesh is here with more on the new GDP formula. Latha, what can we expect?
Well, the base years are regularly changed. The current base year we have to calculate GDP was 2011-12. Our consumption patterns have changed, and therefore the Ministry of Statistics is changing the base year to the year 22-23. That is what is going to be released on February 27th. We will get even more additional information. The new series will incorporate more informal sector data. It will also incorporate more real-time data from the GST and the public finance management system. These are real-time data systems of the government. As well, it will have something which statisticians want, double deflation. That is, you don't just bring down the income of companies by the amount that prices have increased to count the volume of goods added. You deflate the input prices and the output prices separately, which is a more sophisticated way of counting the value add. That's the main contribution of the new series. Okay, as to our poll says that the Q3 GDP, which will be announced on February 27th, will come in at 7.7%, much better than the 6.4% in the previous Q3, but not as good as the second quarter growth of 8.1%. Nominal GDP is where it will be not so impressive, expected to come in at about 7.8, 7.9% compared to 10.3% year ago. Remember, these are forecasts made on the basis of the old series, which ends on Feb 27, but then you obviously can't make forecasts on a series we don't know. Also, the full year GDP number is expected to come in at 7.6%. We will get the second advanced estimate from the MOSPI. Again, this is based on the old series. This compares with the first advanced estimate of 7.4. Last year, the country grew by 6.5. So 7.6 is anyway a very good performance. Again, nominal GDP will be the disappointment. It's expected to grow by about 8.4%. Last year, we grew by 9.8, and everyone wants a double-digit number. Just one more word. The new series will give us comparable numbers for this year, FY26, FY25, FY24. So if the FY24 numbers change because of the new data available, then by nature, 25 and 26 will be different. So the poll that way is of limited value because a whole host of things are about to change with the new series.
So lots of changes to look forward to. All right, Latha, many thanks for those details. Now, Tata Group stocks digested the news of Tata Sons board deferring the decision on Chairman N. Chandra's extension till the next board meet in June. Sources tell CNBC-TV18 that Tata Trust Chairman Noel Tata asked for certain conditions to be linked to Chandra's reappointment. The group stocks were largely in the green today. A CNBC-TV18 analysis shows the group's financial performance has significantly improved during Chandra's 9 years at the helm, barring a blip in the last few months. Yusuf is here with the analysis. Yusuf?
Well, Tata Group's revenue has nearly doubled and profits have tripled with N. Chandrasekaran at the helm of the $300 billion conglomerate. In FY 2017, the group's revenue was just over 6 lakh crore rupees. By FY25, revenue had risen to more than 11.5 lakh crore rupees. The group's profit were around 35,000 crore rupees 9 years ago. As of FY25, profits had nearly touched 1 lakh crore rupees. When Chandra took over in 2017, Tata Steel was reported an annual loss of over 4,400 crore rupees. But since then, the company has turned things around, posting a profit of 3,400 crore rupees in FY25. Similarly, Indian Hotels Company has shrunk from a 63 crore loss in FY17 to a profit of more than 1,900 crore rupees in FY25, reflecting a revival in the hospitality cycle. However, not all bets have paid off. In 2021, Tata Digital acquired a majority stake in BigBasket for about 9,500 crore rupees, strengthening its e-commerce push. But intensifying competition from quick commerce players and others has eroded BigBasket's market share from nearly 50% to under 10% in the last 5 years. TCS contributed nearly 75% of the group's valuations by 2020. But since then, the valuation has diversified, with TCS now accounting for 36% of the overall valuation. Despite the challenging situations in the IT sector, TCS remains the crown jewel with valuations of over 9 lakh crore rupees. Tata Group's total valuation now stands at 26 lakh crore rupees. FY26 has been a challenging year for TCS. In the first 9 months of this financial year, TCS has seen its revenue grow by nearly 3% and profit decline by more than 2%. Tata Motors is also struggling after a major cyber attack at JLR and the tariff tensions hurting automobiles business across the globe.
All right, Yusuf, many thanks for those details. Now, February vehicle registrations are on track for its best showing in the last 4 years. Registrations grew at an average rate of 21% yearly across segments, with commercial vehicles leading the pack. Sudarshan Kumar is here with all of those details. Sudarshan, a stellar month for the auto sector.
So if you want to see the real impact of GST rate cut, you have to look at the registration numbers of the auto sector. And after outperforming the industry for the last few months, Feb registration data is indicating a continued strong demand. And if the current trend holds, February 2026 is going to be the best February that we have seen at least since Feb 2022. Most of the companies have seen registration in Feb 2026. Those are already higher than what they had seen in Feb 2025, and total vehicle registrations so far in Feb 2026 is higher by almost 20%. Now take a look at the sector-wise. So total registrations so far in this month is higher by 20%. Two-wheelers up almost 21%, passenger vehicle up almost 20%, and similar trend can be seen for commercial vehicles and three-wheelers. Now, if you compare Feb 2026 data with the last 2 months, you can see continued demand. Total up this month 21% against 18% last month and 16% December 2025. Similar trend can be seen for two-wheelers. Even PV this month 20% against 11% last month, and CV and three-wheelers too are seeing a strong demand, with registration growing in the range of 19 to 23%. Now talking about the company specific, starting with two-wheelers. Two major companies, Bajaj Auto and Hero Moto, their registration numbers for this month, they are just 3% away from what they have done in Feb 2025. Especially for Bajaj Auto, export contributes almost 50% to their total volumes. And in the last 3 to 4 months, they have been doing 2 lakh units per month, and from the month of April, they are expecting to hit the level of 2.5 lakh units. Another two companies, TVS Motor and Royal Enfield, their registration numbers this month are already higher than the number they had seen in Feb 2025, and they continue to outperform the industry. Amongst electric two-wheelers, similar story that we have been seeing for the last few months will play out this month too. Ather will outperform and Ola Electric will underperform, and Ather's registration so far is already 40% higher than what they had seen in Feb 2025. In passenger vehicle, all the three major companies, M&M Auto, Maruti and Tata Motors PV, their registration numbers this month are already higher than what they had seen in Feb 2025, and surprisingly, the one which is outperforming the industry is Tata Motors passenger vehicle. Amongst commercial vehicle names, both the major companies, Tata Motors commercial vehicle and Ashok Leyland, their registration numbers for this month are already higher than what they had seen in Feb 2025. So in nutshell, if current trend holds, it's going to be a bumper February for the auto sector.
Sudarshan there with the details on those auto stocks. Now, Ather Energy's co-founder and CEO Tarun Mehta has said that the electric two-wheeler maker has the capacity to achieve volume growth of 40 to 50%, which can help it turn EBITDA positive. Speaking exclusively to CNBC-TV18 Shireen Bhan, he said that the company will not price its products below 1 lakh rupees. Take a look.
There is a market of products below 1 lakh in our industry. Our estimate is that maybe about 20% of the industry is below a lakh. again, it's our estimate today. We believe that we've got to focus. We can't go after every single segment, every single price point, particularly when we don't have PLI. We don't have PLI, so we have this huge 15% disadvantage compared to people who don't even want to probably build electric.
Yeah.
So as people who want to probably push the envelope on electric, we are balancing a very difficult task that we are starting off with a 15% disadvantage here. So we've got to be very careful, not get into segments where there could be a there could be a lot of bloodletting that happens, a lot of cost pressures that come in. So for us, the Lakshman Rekha is 1 lakh. We will not go below that. But I think it still leaves a lot of gap. Today, our entry-level model, including the software pro pack, is more than 120K. So I think there is an obvious gap that we can bridge here, which is where EL can fit in quite nicely.
Given the fact that you've sort of got your plan in place, you're building on the infrastructure and the investments that you've already made, by when do you believe you could start to see a return on these investments?
So our gross margins improved. That took us from minus 36% EBITDA to maybe minus 20% EBITDA. But then our volumes went up 50-60%. And that's taken us from minus 20% EBITDA to whatever, minus 5% EBITDA. The current capacities can further grow our volumes by almost, I would say, almost 50%, 40-50%, 30-40%. And I believe that should be good enough, barring like some global commodity crisis. That should be good enough to turn profitable, at least at an EBITDA level, if not a PAT level.
On that note, it is time for us to head into a short break. But coming up next, U.S. Defense Secretary Pete Hegseth has given Anthropic until Friday to allow the Pentagon to use its AI technology across military applications. That and more when we come back. Stay tuned. Welcome back. You're still with us on Business 360. U.S. Defense Secretary Pete Hegseth has given Anthropic until Friday to allow the Pentagon to use its AI technology across military applications. Hegseth has vowed to remove Anthropic will lose its government contract if it fails to do so. Anthropic CEO Dario Amodei told CNBC-TV18 just days ago that he does not want his AI models to be used for autonomous weapons and mass surveillance of Americans.
The possibility of Anthropic being blacklisted by the Pentagon. Have you been in conversation with the authorities there? Is there an update on that you can share with us?
So we've been deploying our models for U.S. national security for quite a while. And, I think our basic position on it is, we've offered the models in kind of a very wide range of, for a very wide range of use cases. And, I think the main areas of concern that we have are, fully autonomous weapons where there isn't a human in the loop, and domestic mass surveillance of Americans. So those are the two areas where we have some concern, and we want to make sure the models are not used in that way. And we continue to have productive discussions about how to use our models for almost every use case.
And staying with AI, from inking deals to calming investor fears over SaaSpocalypse, AI companies have had a very busy week. Rachna Dhanrajani joins us now with the details. Rachna, what's brewing in the AI world?
Well, a massive week in AI. And it's only Wednesday. Anthropic is, of course, caught in a storm with the Pentagon, but the headlines just keep coming from the maker of Claude. The company, founded on AI safety, has now quietly rolled back a core pledge. It now says it will not pause development even if a system appears risky, as long as competitors are moving ahead. Simply put, competitive pressure is now starting to outweigh precautions for Claude. There's also a deepening geopolitical flashpoint here. Anthropic says 3 Chinese AI firms, DeepSeek, Moonshot AI, and Minimax, ran what it calls industrial-scale distillation campaigns. The company detected about 24,000 fraudulent accounts, generating more than 16 million Claude interactions. Anthropic says the goal was to extract its most advanced capabilities, especially reasoning, coding, and agentic tool use, so rival models could be trained faster and more cheaply. The company is also warning that the models built this way may lose critical safety guardrails and could ultimately feed into military surveillance or cyber systems. Markets, meanwhile, are still absorbing the aftershocks of what Wall Street is calling the SaaS-apocalypse that we saw roll out a couple of weeks ago after Anthropic's Cowork plugin released, triggering a sharp sell-off across software names that wiped out almost $285 billion in market value in just one session. But yesterday brought some relief after Anthropic pivoted toward partnerships and integrations. But the broader message from investors is quite clear now. The AI platform shift is definitely underway, and the software hierarchy is now being reshaped. Coming to the hardware front, AMD has now landed a $60 billion AI chip agreement with Meta to deploy roughly 6 gigawatts of AMD GPU capacity, with Meta also receiving stock warrants of up to 10% in the company. The deal runs over 5 years, and more importantly, it positions AMD as the most credible challenger yet to NVIDIA's dominance and sharply emerging as the number 2 now. Speaking of NVIDIA, all eyes are now turning to its earnings tonight. Street expectations are for roughly 72% profit growth on revenue of about $65 billion. Investors will be watching closely for signals on the Blackwell cycle, China exposure, and next-gen chip guidance. Back to you.
So lots of things to watch out in the AI world for. Thank you so much for those details, Rachna. But with that, it is a wrap on this edition of Business 360. More news and updates coming up on the other side. Stay tuned.